What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Sunday, September 26th, and this is officially video number 3 of the day. As I did tell you guys from the first video, I would be breaking down my videos by ticker or by symbol to give you guys a more in-depth look at each individual company, so you guys can kind of get a better understanding of what I'm seeing without having to feel rushed or like I'm throwing way too much information at you, right? It just seems to be working out better as you guys have viewed those videos a lot better. So I appreciate each and every one of you that has tuned in to watch those videos. As always, any like and subscription is always very much appreciated, right? But let's get into it. So this is a loser of the week that I had for last week, which is SDC, or SmileDirectClub.com. For those of you that do not know, Smile Direct Club is essentially orthodontics online. Basically, they do not dentures. No, these people have teeth. They do braces for people, but they do it Invisalign version, basically where you get trays made specifically for your teeth that straighten out your grill, so you're not walking around with big gaps or messed up teeth, essentially making your smile pretty, right? On Thinkorswim, you do see a sell rating. I do think I miscalculated this play because I did play it on a weekly option play last week, thinking it would have good momentum going into this week. Now that I've reviewed the chart, I readjusted my trend lines, readjusted my support and resistance lines. I see where I made my flaw and my mistake. Again, guys, as I've told you, no trader in the stock market is perfect. No one makes perfect trades and gets every single one of them right. You are going to have winners and losers. The point is to eventually have more winners than losers in the end, right? That's how a good trader will become profitable. But you still got to take chances, because scared money don't make money, and that's a saying for a reason. But as you guys are looking at this real quick chart, you do see that nice trend line that I did identify and mark. Later on in the video, we'll show Hinky Ashi to show the differences in trends. But getting into Smile Direct, what is it specifically? As I did say, they do have a website. Essentially, you call or you schedule an appointment online. They send you out a kit, or they send you to a dental office. They take a mold of your teeth. That mold gets sent back to the Smile Direct Club, essentially. I think they're based out of Nashville, Tennessee. So see, you get one of these kits here when you place the order. There is a memberships fee, so you do pay a subscription fee essentially every month. I'm not sure what that fee is essentially broken down to, but I'm assuming it's based on income and affordability and insurance as well. So once you do, you get these little trays that come to you in the mail, and all of a sudden, months later, you have a perfectly straight grill, right? For investors, they do have an investment section down at the bottom. Look at all these teeth. Look at all these grills. Look at all those nice teeth. Isn't it nice to see people's nice teeth? It's terrible when you see people with bad teeth. Like, man, it just makes you cringe. But I did it the old school way. When I was a kid, I actually had braces, had the train tracks on my teeth. It was terrible. I don't wish that on anyone. So I'm actually glad people got the option to do Invisalign now. But they do have an investor page here. Gives you like an overview, news and events for those of you guys that are interested. It looks like they only have one event coming up this week, specifically at the end of September. Outside of that, they don't really have any catalyst that I could find specifically. However, doing some digging, as I did state, I do feel I played this play a little bit too early. I should have given myself more time on this option, and I would have become way more profitable ending this week. So specifically, let's take a look at Lucid Tracking. You see they do carry the #1 rank from Lucid with 34.2 million short shares out of a float of 104 million, which is relatively high, 33% high to be honest. And as we've all learned from ANC and GME, 10% is considered high, 20% is considered extremely high, so 33% is like, what WTF? Like, what the hell is going on, right? That's how high that is. So it does have an extremely high short position on it, which makes me super bullish. Going back to my favorite tool out of them all, Unusual Whales, looking at the flow, I kind of do see where I made the critical mistake. So as you guys did see from the previous video in Go EV, looking at the pie charts on SDC, you see more green on the pies, meaning more bullish sentiment compared to bearish sentiment, as always. But this is where I made the critical mistake. I played this specific strike on a weekly, which was September 24th. As you see, there wasn't that much significant money compared to puts. They're relatively, one is 914,000, one is 712. Now let's take a look at October 1st for the expiration date. you see $2.8 million compared to $2.1 million. Still relatively close, but I like the feeling of this better. I like the feeling of the 15th even more better, to be honest, because this is a monthly, which is going to have a lot of heightened focus on it. And as I've stated to a couple people already, I don't know why, but for some reason, all of the short plays have significant amounts of money and interest going into the monthly of October 15th. I have not figured out why, but every time I look at a play that has a significant high short position on it, the October 15th expiration date is ridiculous normally on all of them. But I have a feeling that this week we either get a lot of money going into this expiration for the end of the week, or it'll be for the 15th. So far, from what we've seen in this previous week, see these exclamation points? It's telling you volume is greater than open interest, but also pay attention to the expiration date, October 1st. It's telling you it's pretty urgent. Now, granted, $154 isn't a lot, right? Not by any means, right? But some of these strikes do carry significant amounts of money going into them. Specifically, we can actually default that by premium. Let the chart load. And you see 1.1 million for November 19th of this year. 1.1 million for November 19th. Again, these are puts. Looks like a sold put specifically, or a sold call, excuse me, 518,000. This is the first actual sold put, which is a bullish sentiment. 480,000. That was from November or September 17th, October 15th. Here we go. 442,000 on a call option at $6. Again, as we did look at the strikes, specifically back here. Where was my strike? Nope, that's not the one. Go back. So I always have to refresh this for some reason. I don't know why, but it gets jammed up on me. So we'll make this the easy way. SDC. And then we'll go back into the charts. There we go. Hold on. I don't know why it's doing that. Let's change it back to time. Oh, I think it's because I did it by premium, so it defaults to days. It gets them all mixed up. Now let's take a look at the chart now that it's by time. There we go. So the October 1st, as you can see from the expiration dates, the one that is being targeted the most is the $6. This one does have a significant amount of money, 2.4 million compared to 1.8 in puts. So I do feel that I did miscalculate this play by at least a week. So hopefully I can get confirmation in that, at least at the minimum, which will give me satisfaction in knowing that I just mistimed it by a week at the most. But looking at the options chain specifically, take a look. For this week, as I did explain to you guys previous videos, I don't play options that are under a 0.50 delta or 0.50, if you will. You can see right here clearly the 5.5 strike or 550 strike expiring October 1st. It does have a 0.62 delta. You can get this relatively cheap. $38 on the low side, $41 on the high side. You could easily play this for $39 or $40 and get away with it. And picking up 3 or 4 contracts, you're going to spend under $150 bucks. If you wanted to play even safer, you could go with the $5 expiration, which again, remember from the pie charts, the 6 is the one that's being targeted the most. So playing the 5 is relatively safe. Plus, you're also going to get the advantage of a bigger delta at 0.82. And again, you're going to pick these up anywhere from 74 to 80 bucks. You could probably walk away with a couple of these. 150 will get you 2. Say 300 will probably get you 4, right? If you play it right, depending on what time you put the bid in. Looking at the chart specifically, you see that we did have this downtrend on Friday. Looking at the RSI, we're essentially directly below neutral at 46, 50 being neutral. We are still in a buying period. We have not yet converged, so we do have the opportunity and possibility to push to the upside still. Again, buying period and selling periods only transition when the lines converge, nothing before then. How long or when it converges is all based on the candles, right? You see that we are approaching this trend line on the downside that we did see coming down, but then also pay attention to these gray bars back here. See this volume? That is significant increase in volume in this play. Just in the last week to 2 weeks. You've seen this volume incline from basically a flat line at the bottom to all of a sudden you're formulating increasing volume, right? Which should be a bullish sentiment sign for anyone looking at this play or looking to get into this play. Because once we break this trend line, it's going to be the moon, right? Looking at the average true range, you see that we are at 0.57, giving us a swing potential of 57 cents to the top side or to the downside. Now remember, with ATR, it doesn't tell you the way a play will break. It's just telling you the swing potential, right? It could go up or down. It's just trying to give you an indication of the swing. But in either case, with these option plays being so dirt cheap for this expiration date, at 0.82 delta, you're giving yourself an 82% chance of being profitable. At 0.62, it's 62% chance of being profitable. Those are pretty good odds in my book because, again, scared money don't make money. And in this hustle, you're either going to be the one getting hustled or you're going to hustle somebody else, right? So let's stick it to them. This is a short squeeze play. Again, I did prove to you guys, Lucid Tracking does have them ranked #1 officially this week. So it gives me even more bullish conviction. Hopefully, my faith can be restored in my ideology. And maybe I just mistimed this by a week. Hopefully, we'll get a nice run up out of SDC this week. But time will tell. I think you guys get the point. I'll leave it at that, guys. As always, please leave a like or a comment down below. If you have questions, always in the comments. Or you can always hit me up on Twitter or IG, as those are public social media spaces for me. And otherwise, guys, I'll catch you in the next one.